So my question, I've been looking into apartment syndication. I'm kind of interested in what you think about commercial versus kind of the stuff that you teach and what your current investment strategy is, because it does feel like now that I've been dabbling in like the bigger apartment spaces, like 64 plus units, there's not really a ton of vexation there because they're all investors and they deal with evictions and they know how to get out of foreclosures, and it's just not widely available data. So pretty much you'd be marketing to tired landlords, which it's more of like a sales game than a marketing game because you can get creative with the structure and stuff like that. But then again, you can raise all this money and get these big buildings, and you have such a small piece of the pie where it's like almost the same as doing like two or three of these, wholesales, or whatever, and you keep 100% of that, right? So I'd be kind of curious to hear what your thoughts are on kind of commercial versus, what you teach.
Yeah, so with commercial real estate, the only way to market to it, in my opinion, is niche sequential marketing. There's no other form of marketing that should happen to a 50 plus unit building, or even really honestly, like a 12 or more unit building. I'm okay with like bulk dialing, like duplexes and quads, 8 units and stuff. I don't know, 8 units, I'm still kind of because at 8, see, here's the thing is in my market, there's a fourplex right now listed for $1 million, which wasn't the case before. I mean, that stuff's like, it's multiple doors on a property is becoming very, very popular around my area. Because what's happening is people are doing a lot more subleasing of rooms. And if you have multiple doors on a property, then you could sublease, not only the doors, but bedrooms. So people are more looking in my area as bedrooms now than doors, because of our need for housing. So at any rate, I'm okay with duplexes and quads, like go aheading and triplexes, doing bulk, like dialing. But anything else above that, like I would strongly recommend niche sequential marketing. And my only goal in that is not to really look for vexations. There is some, like there will be a 24 unit building or a 36 unit complex that has a probate on it, right? That's owned by a single person for sure. But you get into the 60 plus, the 150 unit complexes, very, very, very few of those are owned by an individual name. So it's not going to get caught in probate. However, they may have where they're really underperforming and the entity is no longer activated, for example, right? That's a scenario that could be. And so anyway, the main goal, if I'm marketing for trailer parks or larger multifamily, my main goal is just to get a phone number for the owner, because that's the big obstacle with those assets. Because any other information that's out there is going to be for the property management company that's managing that asset for the owner, and that's that's the obstacle, is getting the correct number to the owner. If I can get the correct number to the owner, and honestly, most of the time there's multiple owners. There's not just one person making that decision if it's under an LLC. And so all I'm really doing is just building the relationships with all those individuals. And what I would do as a barrier of entry, which I've done this in the past, not for that many doors, but for less doors, is just take the standard normal, which is nice about commercial real estate, is it's normal flat out to get a 2% acquisitions fee. So if it's a $12 million asset, it's normal for you to make 2% in a closing. Mm-hmm. Like, it's not like, oh, well, you can't, you're making how much on the deal? I'm making $60,000 or on this wholesale deal. What the fuck? Like, mm-hmm. No, I'm not paying that. Like, no, it's normal to make 2% acquisitions fee in commercial real estate. So I would find somebody in your market that's focusing, or a company that has a fund already in place where you can get the deal from interested to an LOI, and then hand off that LOI for, if they go under contract, a 2% acquisitions fee. That's my preferred way that I'm usually telling people to get started into the commercial side. If I already have the capacity and the connections to bring it in and close it myself, then I would do that. But there is no vexations really. It's it's very difficult to kind of target that because I mean there could be a vexation, like a partner could die, but again, it depends on how it was structured. Is it a GP LP situation? Was it 4 guys that came together and put money together and the assets owned by just general partners? There's a lot of other variables. So instead, I would just focus on the niche sequential, the assets that you're interested in. There may only be like in your area, there may only be like 30 of them.
You just
You
pull them
know,
all.
just pull them all, right? And you can just message. SIF support has that data set, so just message for the 60 plus units, in your area or in the Northeast, and just pull them all and just niche sequential through them, and then gather as many correct numbers, and then go through there. So it's the same thing with that I did with duplexes and quads. Like I have 62% of all correct numbers to all duplexes, quads, and anything less than 12 units in Okaloosa County. And so now it's just a not interested follow-up, because with an asset like that, especially if you're trying to bring it down yourself, even if you just convert 2 every 2 years, 1 a year, that's a net worth increase of X amount of dollars every 2 years. Not, it's not bad at all.
And are you asking, if you were to pass it to someone else, are you asking for equity and the fee, the acquisition fee?
So you could do both. You could structure in that way. Yeah. Cover your expenses and then have equity. For me, I've done it with a park before. And I was focused on this. I haven't focused on this in a little bit, but I was focused on this for probably like 6 months or so, where what I would do is I would just market directly to commercial assets, and then every lead basically I sent to another company, so that I didn't have to worry about doing the acquisition, even the analysis on it and stuff. And then my only deal with them is that I got a at minimum a 1% equity stake. And that's really fair for that, right? Any company that's doing volume and has a fund in place would more than happily give you a 1% equity stake for giving a lead that ends up converting. Mm-hmm. I don't see anybody not openly doing that.
Yeah, smart.
And if it's depending on the size of the asset, and the reason why I chose 1% as being okay is because most of the assets that I'm an LP in, 100 grand only gets me anywhere between 1% to 2.5%. And the tax benefit, it might be getting a 1% in equity, but I'm actually getting, on average, anywhere between $700 and $1,000 a month in cash flow, plus, roughly, again, depending on the price of the asset, anywhere between $40,000 to $100,000, depending on, again, on the price of the asset.
Interesting. So those guys, sorry to cut you off, those guys are raising the full purchase price. They're not raising 25% loan to value.
Well, no, it depends. Usually you're going to raise your 25%, plus you're going to raise your rehab that needs to be done to bring the asset to its next level. And on top of that, usually it's like a 10% margin or so. It just really depends on the size of the asset. You're usually, most of the time you're going to overfund, so that you have some room there that you don't have to worry about. Gotcha. But the depreciation schedule is based off of the total cost of the asset, not what they raised. And so that's why, like, hey, for a 1% stake, you can get, for somebody that has a higher tax bracket, just having 1% on the name of an asset that was purchased for 10 million is worth it all day long. I mean, if I could just do that, if I could spend $10,000 a month to get 1% of a $15 million asset twice a year, then I would do that instantly.
Mm-hmm. Yeah, no, that makes sense.
Yeah.
Thank you.